Hi everyone. It's June 20, 2025, 7:14 p.m. Japan time. Today, the Nikkei closed at 38403 yen, down about 0.2% from the previous day. The volatility index remains elevated at 25.6, showing continued caution in the market. Looking at the valuation, the PER of the Nikkei sits at 15.46 based on forward EPS of 2484 yen, which suggests corporate earnings are recovering. Some are even projected the return to 2500 yen EPS levels soon. On the bond side, the 3-year JGB yield is at 2.89%. And today, the MOF, Minister of Finance, held a meeting with primary dealers and announced a cut in long-term bond issuance by 3.2 trillion yen. Meanwhile, the BOJ bond buying will decrease by around 2 trillion yen over the year. So in net terms, some supply is shrinking by 1.6 trillion yen, which could help cap yield in the short term. From the market perspective, this is likely to be seen a positive for equities. For the Nikkei to break above the current range around 38500 yen, we will need to see lower long-term interest rates and continued positive momentum in EPS. Right now, we are hovering between 38000 and 39000 yen, and it feels like the market is waiting for direction. Whether we break up or down depends largely on the bond yield and earnings, EPS, and outlook. On the geopolitical front, tensions remains between Israel and Iran, but it still feels like a by the distant war environment. However, what's concerning is the rising number of reports about China conducting airspace incursion near Taiwan and rumor that China might be eyeing the Vladivostok regime, which it historically claimed. So while Ukrainian Russia and the Middle East conflict dominate headlines, there are signs that China is quietly moving in the background. Japan, being an island nation, is somewhat geographically shielded, but any Chinese action near Taiwan would be impossible to ignore. There's a chance that China could exploit global destruction, especially if the US and Europe overstretched with Ukraine and the Middle East. And with China's massive population and political leverage, there's always the possibility they strategically influence events behind the scenes. All this contribute to rising geopolitical risk and perhaps explain why the VIX remains high even as stocks price grind upward. That said, it's still a range-bound market with no clear direction. The upper house election in Japan is coming up on July 20th, and while there was talk of simultaneous general election that's being postponed, still political developments could affect sentiment. We also have a decent amount of short positions in the market, and depends on how they react. We could see a move. Last July saw a sharp rally, so let's see if that pattern repeats. The US market was closer yesterday, so there was not much movement globally, but overall, there's no sign of overheating. Valuations are recovering, volatility is high, but stable. Our sentiment feels cautious but steady. So that's it for today. If you following my trade contents, I'm still holding my long put as a hedge. Thank you for listening, and I'll talk to you again tomorrow.